Hello, I'm Bianca Bangayan, an Assistant Manager in the CFT Supervision Division at the Authority.
And I'm Ellie Stevenson, an Assistant Manager in the same division. Today we're going to spend some time talking through the findings of a recent thematic project covering customer risk assessments, which is required by paragraph 6 of the Anti-Money Laundering and Countering the Financing of Terrorism Code, which we will refer to as the Code going forward in this webinar. There are a number of key points that are important to keep in mind as we progress through the presentation today. Firstly, this was a thematic exercise only looking at customer risk assessments and the associated procedures for the same. The exercise itself focused on the accountancy profession, specifically external accountants, tax advisors and payroll agents, including a number of firms who carry out a number of these activities in line with their registrable activity as a designated business. However, the learning points can be applied to all firms obliged to comply with the code. The thematic exercise consisted of 51 desk-based inspections, assessing firms' compliance against the code and their own procedures and controls. The first inspections began in August 2023, with the final of the 51 inspections concluding 9 months later in April 2024. There have been a range of findings, observations and learnings from the thematic project, the complete results of which were published in the Accountancy Profession CRA thematic report in July 2024. We encourage all firms to read the report in full for additional insights. The report covers the results and findings from the desk-based inspections and highlights a number of best practice points which can be found within the red boxes throughout the report as per the colour-coordinated key. We would further encourage all firms and relevant persons to read the report and consider implementing the learning points as necessary within your firms and businesses.
I will now provide some background on where the project started. The sectors were chosen as some of the largest designated business sector of the island. The accounting profession sector is highlighted in the Isle of Man's 2020 National Risk Assessment as one of the higher risk designated business sectors in the island, and the thematic presents a great opportunity to test and evidence how supervised entities are meeting their CFT obligations in relation to a really important area. In addition, increased engagement with businesses during the project has allowed us to discover and highlight some best practice that can be shared and fed back with the wider industry through the thematic report, as well as future handbook and guidance updates which will follow in due course. Planning began in 2023 using data from CFT annual return, inspection history alongside a number of other risk factors. This project has also added to the authority's wider CFT evidential understanding and picture of risk, building on the outcomes the authority has recently seen from the Foreign PEP thematic and TCSP BRA thematic projects. The thematic also allowed us to work towards achieving our regulatory objectives, which are protecting consumers, reducing financial crime, and maintaining confidence in the financial services sector through the effective regulation. This thematic project reviews against paragraphs 4 and 6 of the Code. In relation to customer risk assessments, the Code requires relevant persons to establish, record, operate and maintain effective, clear and comprehensive procedures and controls in line with paragraph 4 of the Code, carry out an assessment that estimates the risk of MLFT posed by the relevant person's customer in line with paragraph 6.1 of the Code, undertake customer risk assessments prior to the establishment of a business relationship in line with paragraph 6.2a of the Code, that customer risk assessments are recorded, frequently reviewed and amended so as to keep the assessment up to date in line with paragraph 6.2b and c of the Code. And all customer risk assessments have regard to and for all relevant risk factors, including those prescribed at paragraph 6.3 of the Code.
Initially, the thematic project consisted of reviewing and analysing existing data held by the authority from all 196 accounting profession firms registered under the Designated Business Act 2015. For the purpose of this thematic project, the accounting profession includes registered persons undertaking and carrying out external accountant, tax advisor or payroll agent designated business activity. A total of 51 firms, or 41.8% of the accountancy professionals supervised by the authority, were selected to participate in this customer risk assessment thematic. This is in line with the authority's ongoing proactive risk-based approach and engagement. When we look further at the total customer base of the sector, the number totals just over 14,000 customers. The 40% of accountancy professionals that were inspected as part of the thematic covered over 60% of the total customer base of the sector. As you can see on the slide, we have broken the customer base down further per risk rating.
To assess the sector as a whole within the designated business registered firms framework, on this slide we will see how the accountancy profession fits in and makes up the wider industry. Of the 196 accounting firms, 74 have chosen to be overseen by a delegated body, resulting in 122 accounting profession firms being directly overseen by the authority for AML-CFT. Of the 122 accounting professionals, the authority inspected 51 registered persons. The registrable activity included the following, which totalled 36 external accountants, 31 tax advisors, and 16 payroll agents. This thematic exercise has given the authority a stronger understanding of the controls in place within the sector. With all thematic exercises, we hope this will assist all firms in enhancing the procedures, controls, and the operation of the same where necessary. This includes firms in the wider finance industry who are not directly involved, however can apply the learnings identified, and we, the authority, will feed back the learnings and best practices identified back into the guidance in due course.
The primary objective of the CRA Accounting Profession Thematic Project was to review a sample of each firm's CRAs and CRA documentation to determine whether the firm had demonstrated the requirements of the code. The four main objectives of the desk-based inspections are included on the slide shown on screen. As part of this thematic inspection process, the firms involved were given 5 working days to supply the requested documentation to demonstrate and evidence compliance with the inspection scope and objectives in line with the code. The authority's officers reviewed and assessed compliance with the code, examining firms' CRA templates, the relevant policies, procedures or guidance documents regarding the CRA. With regards to the CRA, the authority selected up to 5 customers' most recent CRAs. In considering the procedures and risk assessments, the authority were able to establish the selected firm's level of compliance with paragraphs 4 and 6 of the code. The sample customers reviewed and the customer file selection process requested firms to provide copies of the customer risk assessments for a firm's oldest customer, newest customer, highest risk customer, highest income customer, and a PEP customer. If any of the requested customer files were not applicable, repeated, duplicated, or already covered by a previously requested customer file, a replacement customer file of the next highest risk customer was selected.
The first objective of the inspection was to consider paragraph 4 of the code. The authority's officers observed mixed levels of compliance in relation to this paragraph. The authority found 26 contraventions identified in relation to paragraph 4. To analyse the graph on screen, some of these contraventions were more minor and in relation to one-off isolated operations of procedures, which may have been historic. Where a whole contravention of paragraph 4 of the code was identified, this was in relation to missing, ineffective, or very poor procedures and controls. The authority would like to reiterate that the code requires all firms to establish, record, operate, and maintain effective procedures and controls. For more information, please see section 2.1.2 of the handbook. The second objective of the inspection was to consider paragraph 6.1 of the code. The authority found that having a strong and clearly defined risk methodology behind a customer risk assessment was key in determining and allowing a firm to carry out an assessment that accurately estimates the risk posed by the customer. This also allows a firm to align an evidence with their findings from their business risk assessment and ensure they are operating in line with their risk appetite. This thematic report details, explains, and outlines the authority's expectations of firms on how to comply with the code and the handbook. And for further details, we strongly recommend relevant persons to read the report and implement the appropriate findings. Using a calculated risk rating methodology will allow firms to accurately assess separate risk factors in a given customer's situation, increasing the firm's understanding of priority and urgency. We have included within the report observations, a case study, and a high-level example methodology of how sections with multiple questions can have risk weightings with scores that multiply to produce a total score. This total score can then be set or aligned to a risk rating scale. It's also important to include override or heightened scoring questions or areas which may be out of a firm's risk appetite. These questions can set a mandatory higher risk rating or unacceptable to the new business if necessary.
Assessing money laundering, financing of terrorism and proliferation financing risk goes beyond collecting quantitative and qualitative information. It forms the basis for effective and proportionate risk mitigation, which must be kept up to date to remain relevant with appropriate narrative which demonstrates understanding. When we carried out analysis of the 122 accountancy firms' use of risk ratings, we saw poor use and allocation of all the ratings, typically higher, standard, lower, or a similar rating reference. Only 10% of firms utilised and reported customers in all three ratings. Firms should aim, where applicable, to use and rate customers against all three code risk ratings and scores. Limited or sole risk rating use may be indicative of poor procedures and controls, ineffective risk methodology, or inappropriate identification of higher risk factors as a standard or lower money laundering or financing of terrorism risk. The handbook provides further guidance on this matter in section 2.2.4. The third objective of the inspections was to consider paragraph 6.2 of the code. Paragraph 6.2a requires a CRA to be undertaken prior to the relationship starting. Paragraph 6.2b requires a CRA to be recorded, documented and written down. Paragraph 6.2c requires a CRA to be reviewed and updated if necessary, and for such a review to be recorded, documented and written down. The authority identified that there was an 80% average of compliance with these three subparagraphs across the 51 inspections carried out. During the inspections, the authority's officers observed in some instances that a number of firms had only documented and evidenced reviews or updates of the CRA within a given calendar year, without providing a specific date. In such cases, reviews were seen to be ranging from 13 to up to 23 months apart. This extended time gap between CRA reviews was not in keeping with those relevant persons' documented procedures and controls, where the review period was defined as yearly. To touch on some of the best practices, all subsequent reviews of the CRA were separately recorded rather than a CRA being overridden, and there were clear details of the staff members involved in completing and improving the CRAs.
The fourth objective of the inspection was to consider paragraph 6.3 of the code, which sets out certain risk factors to be included within the CRA. The authority's officers saw mixed levels of compliance in relation to paragraph 6.3 of the code throughout the thematic project. However, generally more positive than negative outcomes were observed. The published report explains this in detail by each risk factor. Let's have a look at the two areas of the code where we observe the lowest levels of compliance throughout the project. Paragraph 6.3d of the code requires that firm CRAs must have regard to all relevant risk factors, including higher risk factors included in paragraphs 15.5 and 15.7 of the code, such as whether a customer is resident in, located in, or has activity in a jurisdiction in List A or List B, whether a customer is a subject of a warning in relation to AML CFT matters issued by a competent authority, PEP involvement in the business relationship, nominee or bearer share arrangements or involved with higher risk products, whether the customer themselves may be a high net worth individual, being commercially exposed or persons performing prominent functions for international organizations, circumstances wherein the customer is not met face-to-face at any point during the business relationship. Further guidance around compliance with paragraph 6.3d of the code can be found in the code, handbook, sector-specific guidance, and the published thematic report. Looking at some linked subparagraphs of the code with paragraph 6, paragraph 6.3e and 6.3f of the code required firm CRAs to have regard to all relevant risk factors, including the involvement of any third parties for elements of the customer due diligence process, including where reliance is placed on a third party, and furthermore, any introducer risk assessment carried out under paragraph 9.4 of the code. The authority has further expanded and explained its position with the graphics shown on the screen. Firms will hopefully find it useful in assessing and analysing these two aspects of the code against their own business and any third-party interaction involving customers. Paragraph 6.3e of the code applies and should be considered where during the lifetime of the customer or business relationship, a third party is involved with supplying element of CDD or ECDD. This will typically increase the inherent risk level of MLTF or PF. Paragraph 63F of the Code applies where an introducer is involved in supplying elements of CDD or ECDD prior to the customer acceptance and during the onboarding stage. This can carry an increased level of inherent risk of MLTF or PF, fraud, or criminality, adding extra steps in the supply chain of information, potentially obscuring or concealing the identity of the customer.
We wanted to conclude this webinar by discussing some of the good practice points highlighted in the report. I won't read them all out, you can take these away to read as they are explained further in the thematic report. Overall, it is important to make sure across the firm there is a well-organised policy, procedure and controls library, as this will aid both the firm and the authority on future inspections. CRAs are vital in assessing a relevant person's risk posed by its customers and the need for enhanced procedures and controls to be applied, and to help the firm apply a risk-based approach including proportionate resource management with a focus on the firm's highest risk customers. Another good practice point identified is to clearly document the risk methodology and matrix used, ensuring the use of a well-designed and thought-out methodology which is utilised in practice and explained in the supporting policy and/or procedure. And finally, ensure new reviews and updates are clearly recorded and evidenced in line with the relevant person's procedures and controls. All of this will assist in evidencing and demonstrating strong compliance with the Code. As previously mentioned, the thematic report highlights 38 best practice points, which can be found within the red boxes throughout the report, as per the colour-coordinated key. The CRA thematic report also highlights the AML CFT Code requirements, which can be found in blue boxes within the report. Relevant AML CFT handbook quotes are in green, and further good and poor practice matters with examples, figures and data can be seen in yellow. Guidance graphics can also be found throughout. We hope you found this webinar useful. If anyone has any specific questions regarding this thematic project, please contact our AML CFT Supervision Division using the email address which can be found on screen. As highlighted throughout the presentation, further guidance and information can be found in the thematic report as well as the AML CFT handbook.